I want to talk about a few different scalping tricks or criteria that I look for before I enter any one of my trades. I must check off these boxes that I'm going to go in this video. I'm going to show you actual trading examples. We're going to relate it to the charts so you could understand the concepts a lot better. If you are an active intraday trader, this is very, very vital information. I watch it every single day, every single hour, and any single trade that I put on, I need to see what I'm going to go over in this video in order for me to take a high quality setup. I don't see a lot of traders doing this, and why I think a lot of them fail at the trades they take or why they're not taking high quality setups is because they don't put precedence on this, and in fact, they might not even be aware of it. A lot of people will just draw a random support level, resistance level. They'll wait for the market to break it. And as soon as they break it, they get in with no awareness of the conditions in this video. Before we get into the conditions and the charts, I'm going to post a link for my Instagram in the description below at Entrepreneurship. I definitely recommend everybody watching this video to follow me on there. I post daily trading recaps along with really good trading tips and tricks that I guarantee you're not going to find anywhere else on the internet. The link for this will be in the description below. You're seriously missing out if you're not following it. But now let's get right into this video. So the first criteria that I have to see and I have to understand before I enter a trade is what I call the market's macro structure. Now it depends what type of trader you are. You could be a trend trader, you could be a swing trader, you could be a scalper. In my honest opinion, for myself to take high quality setups and looking back at my journal and reviewing this and having a good feel of the best setups that I take, the highest quality setups that I make the most amount of money on is when the macro structure aligns with the trade that I'm taking intraday. What I mean by this is just zoom out on your charts. Don't be so fixated on what's going on right in front of your face on a shorter time frame chart. Even if you are scalping, it's important to look at it, but it's also very important to zoom out at times and understand the bigger picture. And that's what I call the macro structure. We could go on a higher time frame chart, 4-hour, daily, 1 hour. It does not really matter the time frame that you look at, but you want to look at the overall sense of direction with the trend. Lower lows, lower highs, higher lows. Is the market balanced? You also really want to focus on where the market is currently opening or trading at in relation to the previous day's auction, the previous week's auction, or the current structure that we're seeing in the market. Are we above previous highs? Are we below previous lows? Are we inside of a range? What are the conditions that we're seeing? And then you adjust and adapt your strategy and your style and your entry to fit those conditions of the macro structure. Different overall market conditions present different ways that we must adapt and trade as a trader in order to be flexible to take quality setups. For example, last week, the market, specifically the S&P, and this could go for any stock, any market, it doesn't really matter, but the market was balanced. And what I mean by the market being balanced is we have a very tight range. We're consolidating in a very, very tight little consolidation phase. And this is where market participants, buyers and sellers, are agreeing on price. When we have an equilibrium where buyers are equaling sellers, we are not going to have continuation in any direction. So anybody that's looking to trend trade something or maybe play a scalp inside of the range, expecting a large continuation or a large trending move where maybe your target is further away, the chances of that happening is less likely. So when the market is balanced, we must understand the macro structure, higher time frame analysis, and understand that we have to tweak how we're trading. Maybe our entries have to be different. Our targets have to be closer to our entries as long as the risk to reward makes sense. We have to understand that there's imbalanced conditions. We're not going to have continuation until one side of the equilibrium takes control, either buyers or sellers. Last week in the Discord, I was telling members every single day last week that the market is inside of this range. It's a balanced range. And no high quality setup for me will come inside of it. We can rally, we could sell off, we could make money. However, no high quality setup will come inside based off of how I trade. You must tweak your strategy or tweak your rules in order to fit the conditions of the market. Also, macro structure, the market's uptrending. We're putting in higher highs. Every time we break the high, the next high is higher than the previous. And every single dip down that we see gets bought up. And the previous low is lower than the current low. So we're putting in higher highs and we're also putting in higher lows. The market is uptrending on a 3-hour chart in this case. What I see, what a lot of people will do is they'll come up with a level, maybe intraday. They say, okay, we have a support level at this red line that I just marked up here. I'm going to play the market short when we break this red line, not putting any significance that the market is uptrending. They're playing puts on maybe a breakdown in an uptrending market, not realizing that, let's just say we have a demand zone directly in this area right here, that when the market does break their support level, they're essentially shorting inside of a demand zone on an uptrending market and providing liquidity for their sell orders for other people to buy, specifically if we're talking about a demand zone in this case. And then the macro structure for a downtrending market, right? The best setups in downtrending markets when sellers have control of the macro structure are going to be failing rallies, shorting pops, shorting relief bounces, and then playing breakdowns to the downside, not vice versa. And this will give us that higher quality setup when the higher time frame analysis aligns with what we see in intraday. Now, the second criteria that I look for, I want you to understand that it's like a river and they're all gonna flow together. And when we get all four in sync, this is the best setup. So now that we have the macro structure, the second point is microstructure. So what we want to look at, especially if we are scalping or day trading, is a shorter time frame chart on an intraday basis from when the market opens up at 9:30 a.m. Eastern. If you're a scalper, really focus on a 1 minute or even really focus on the tape itself, the orders actually coming into the market. If you're a day trader looking to capitalize on a trending move in the market, maybe focus on a 5 minute, 10 minute, 15 minute, but you want to go on a higher time frame if you're not scalping. If you're scalping, all you really care about is what the market presenting to you right now and what it has done in the short term, near future, and the short term, near past. With this being said, you want to see if the market on an intraday level is putting in higher highs, putting in higher lows. Are dips getting bought? Are rallies getting sold into? Are we having direction? Is there momentum? What is the volume like? These are all things you need to consider on an intraday basis. I want you all to think of the market just like an auction place. The market's not going to move up because your RSI or your stochastics told you it's going to go up. The market's going to move up because actual orders coming into the market that we've seen in the past, maybe we have a really large buyer trapped here at the low at demand, and that's going to fuel a further move up. Or we have a really trapped seller at the high, and if the market puts pressure on him, that seller is going to start rejecting and the market's going to sell off of supply. So put yourself in the perspective of an intraday basis of the structure that we're seeing and the orders coming into the market and other participants. Where are people buying? Where are people selling? Is there interest at higher prices? Is value getting created higher as the market moves up? Is value getting created lower as the market moves down? Is new supply forming? Is new demand forming? These are all things you need to ask yourself and think about as the market's developing. The market's the storyteller. It's going to tell us everything that we need to know as it's developing in that present moment. The present moment is the best moment because the market's going to tell you everything you need to know. With this being said, let's go back to point number one with the macro structure. In this example, the market is uptrending. We're putting in higher highs. We're also putting in lower lows. Dips down are getting bought up at this demand zone right here. This dip down getting bought at demand, actually forming new demand as well. And in the past 3 or 4 days, the market is uptrending. Dips are getting bought up. We're finding value, as you can see this consolidation phase right here, right at the previous day's high. So value is getting accepted higher, demand is forming, new demand is bouncing, and the market is moving up where dips continuously get bought up. Now the market opens up the following day, demand forms in the overnight session, and then the market dips down perfectly into this demand zone. This is where intraday microstructure is vital. So on this sell-off, as the market started moving lower right here, if you are watching the tape, time and sales, or other order flow tools, there was some decent sized activity as the market was moving lower into this demand zone. I could only show you what it looks like on Bookmap, as this is the only replay feature I have back on this day. But essentially the market sold off over here, formed a little bit of a high volume area around 3823, 3822 as we were selling off. And this is the consolidation range that was finding value or consolidating, finding fair value around 3817, 3816, right at this demand zone. Now on top of this, we are consolidating at the lows. We have an equilibrium between buyers and sellers. even though we are selling off, the market is coming down into this demand zone right here, and we are consolidating, moving sideways, where one side participant is trying to figure out who is going to show initiative, and are we going to continue to move up, or are we going to continue to move down and sell off even further? You need to wait for the market to present you the information that's telling you, okay, buyers are factored into the market, buyers are present. And when we spot them, especially if we're scalping and we see something significant come in on the tape or the chart or something volume-wise, okay, we see that, I'm hitting my buy button, I'm getting in right now, and I'm not hesitating. As soon as you spot that, you have to enter without hesitating, and you need to calculate your risk to make sure it fits your risk to reward criteria. With this being said, in the Discord that day, I said keep an eye on 3817, 3823 in the short term. Below 3817 brings 3805, and above 3823 brings 3830. So this is kind of the dynamic aspect to it. The market could go either way. Right now, at this balanced period, we're consolidating in this range. So I come up with my levels and I wait for one side of the micro structure intraday. We formed a double bottom, a higher low after a consolidation range, and now I have to wait for the market to start moving up, indicating buyers are buying as we move up. Then I could take the market long and have my targets above price. So what you're going to see here is the market broke above 3823, and as you can tell, more volume is building here at the lows. Now we're just waiting for those buyers to step in. As soon as I start to see some really aggressive prints come up and get above 3823, I knew if we could get above that, then we're most likely going to see 3830. Now the market comes up and you see those aggressive prints that come in. With this, you cannot hesitate. Maybe you get in a point or 2 points before your 3823 level hits. Or maybe you get in maybe a second or 5 seconds before your support level breaks or your resistance breaks. But get in when the market tells you to get in. We see this structure now. Now the market came down, high volume at the lows, finding acceptance as the market moves down, inside of a demand zone. On top of it, puts the cherry on top, and then we get the market to move up. This is where you enter without hesitating, and now you just focus on the chart and wait until your target hits or your stop loss triggers. But I cannot tell you how important it is, as now you can see this little structure forming. Now we have intraday structure forming. Large buyers now defending 3818. Remember that level, 3818, 3817? Market dipped down into that, and then we get that strong push up, and there you go. 3843, and that's how you get your structure on the intraday level, intraday basis, to give you what you need once you confirm the macro structure. Now, the third thing that you need to look at, and this is very, very important, especially if you trade indices, you trade futures, maybe SPY, QQQ, ES, NQ, micro contracts. If you trade an overall market, which is basically a breadbasket of the underlying stocks, it is vital, in my honest opinion, and I can only speak for how I trade and what I have success with. It's important to look at the correlated markets or the correlated stocks of the index you're looking to trade. For example, the top 5 weightings of the S&P, if I am trading ES and I'm expecting the S&P maybe to break above resistance and continue moving higher, or maybe even bounce off of a demand level, right? If I'm bullish on something, it's vital for me to keep an eye on what the equities are doing that make up the S&P. Specifically, I'm going to look at the top 5 weighted names in the S&P. So if I'm looking to be bullish on ES or the S&P, I want to make sure Tesla is strong. I want to make sure Apple is strong, Amazon is strong, Google is strong, or any other major market-related name. And you could really, to alleviate all the other noise, focus on the top 5 weighted stocks for each indice. Apple, Amazon, Tesla, Google, Microsoft. But you want to make sure if we're bearish the S&P or we're breaking below a key level of support, we're targeting the next demand zone lower, you want to make sure Tesla is weak and selling off very aggressively. You want to make sure Amazon is selling off, maybe breaking below demand or breaking below support. When we could have the correlated markets respect our analysis with the overall indice, that is something that you really want to see for great confirmation. Another name is VIX. You could look at VIX, especially if you're trading the S&P. For example, we had a very key demand zone at this green box, which I posted in the pre-market plan of the Discord. And I had 2 scenarios. If we bounce off this demand zone, I expect the S&P to sell off at supply and it's going to give us a nice opportunity to get short. However, if VIX fails at this green demand zone right here, then I'm going to expect the S&P to continue to rally, and it might provide us with a really high quality setup to move up out of market balance. Other people look at other little tools, other tickers, and other names that relate to the organic price action, and that's what you have to do. And in my opinion, you need to know what's going on with the overall market, especially if you're an intraday trader. You don't want to be caught on the wrong side of the market. When things align, this is when you're going to take a high quality setup. But when things are a little mixed or they don't make sense too much, that's really not the best setup to take. The next point is something that I cannot really define or go over too much, because this is a personalized little criteria and everybody's going to develop it. It's instinctual and it's basically feeling the market. You need to be able to feel it. And I don't know how to really describe it or define it other than just knowing something that has worked out for me in the past and repeating that process. So it's not something I could define if you haven't truly felt it and experienced it yourself. Also on top of this is being able to read the market properly. Everything that I've mentioned so far, if I can't see or read those 3 points that I've mentioned fully and I don't have a good feel or understanding or read on the picture that the market's portraying to me, then the best thing that we can do as a retail trader, our greatest advantage is being able to sit sidelined with no position if it does not make any sense. For example, remember that balanced range that I explained to you guys earlier in this video, how the market was consolidating recently in the price action? Well, last Friday, the market was basically consolidating inside of this range. Yes, we had a demand zone, but looking back at the overall macro picture of the move, we are inside of a tight range where dips are getting bought and rallies are being sold into. So expecting continuation to the up or downside is very less likely inside of this range. And reviewing my journal and understanding my best trades and my worst trades, I take the worst setups when the market is basically mid-range, in between balance, not really at an imbalance. So last Friday, the market basically was selling off. We were moving up, we were moving down. The structure intraday was a mess. We really weren't giving clean signs of price action. Buyers weren't winning the battle, in my opinion. Sellers weren't winning the battle intraday. And on top of the macro structure, we were really inside of that balance range. Now, the correlated markets were also being very respected to what the overall indice chart was doing, specifically the S&P, and that kind of also made it a little hard to read as well. We bounced off this demand zone. Yes, we rallied. Yes, we could have made money off of it, but I did not take a trade this day. Now, the reason why I didn't take a trade this day was I couldn't feel what was going on. I could not read what the market was presenting to me right in front of my face. There's some days where I don't know what's going on, or I can't get a good feel of the conditions, or I can't get a good feel of buyers and sellers, and something doesn't make sense. And that feeling or that inability to read the market some days is totally normal. I just avoid it and do not take a trade. The greatest ability is being able to sit on my hands and not forcing a setup when I don't see something that I know works out for me, or my edge being present. If I don't see it, I don't take it. If I was confident in the setup, I would have 100% taken this trade if it was a high quality one. It doesn't even have to be a really high quality one. It could be a little lower than a high quality one. I would just reduce my size. But if I could truly read what's going on and I see something I like and I manage my risk properly, I have no problem taking the trade at all. But if I can't see it, I can't read it, and I can't feel it, I'm not going to take it because I'm not going to have confidence in what's going on in that position. The best example I could give with this is put yourself back in elementary school when you were younger. And remember when the teacher called your name to answer a question that you did not want to answer because you didn't know the answer to it? You don't want to get humiliated in front of your classmates saying the wrong answer. Maybe you weren't paying attention. Maybe you were picking your nose or something that you didn't know the answer. And now you're going to be a fool to your classmates that all know the answer because you weren't paying attention or you didn't understand it properly. However, if you know the answer and you're confident that maybe you studied so long and you know this trick question answer, what are you going to do? You're going to raise your hand voluntarily by yourself with confidence, and in front of the whole class, you're going to answer the question when maybe nobody else knows it. Why did you raise your hand and why did you stand up in front of the class when that's not something you normally do? The reason is because you understand it, you read it properly, you comprehended it, and you know what's going on. When you have this confidence, you're going to do what's necessary to get it right. And in the market, you're going to do what's necessary to put a trade on and make money. But if you don't understand it, or you didn't read the book, or you can't comprehend the story or you don't know what the teacher's asking, you're not going to voluntarily go in front of the class and raise your hand and answer a question that you don't know the answer to. This is all relatable to the market. Can I feel it? Can I comprehend it? Can I read it? If I can do so, I will confidently take the trade. If I cannot do so, I will confidently not take the trade, and I'm accepting of that. A lot of people are not accepting of it, and that's why they fail, because they force setups and they take trades based off of what they think is going to happen instead of not being able to react to what's actually going on in front of you. So if you take trades based on what you're reading that you expect to see or you expect to happen, you're never going to be successful, and you're going to take really bad setups. You might have one winner that works out for you, but I can guarantee you, you're not going to be able to repeat that process on a daily basis. So I hope this video helped. If it did, drop a like, comment any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course. It comes with access to the Discord and no extra charge. The prices on the website are the current discounted prices, and they will be going back to original very, very soon. But I'm ending it. Peace out.